Hey, Amy Peterson here, the Forex Boss Mom, here to talk to you about Forex. We're going to talk about Forex, what it is, and how you can make money from it. So what exactly is Forex trading? Forex comes from the words foreign exchange. This is a global market where people and companies exchange currencies. Daily average of trading volume is around $6 trillion. Now, this is equal to 25% of the GDP of the United States as of 2017. GDP stands for gross domestic product, which is the total dollar value of all goods and services produced in a country during a year. So that's 1/4 of the services. Isn't that amazing? The main currency used on the Forex market is the United States dollar. So all other currencies are priced against it. This is called the exchange rate. Now, I'm sure you've heard about the exchange rates and stuff like that, but what about some more information on it? Well, exchange rates are like price tags on products in a store. They show how much another currency costs in dollars. Currencies have short names, like the US dollar is USD, the British pound sterling is the GBP, and the euro, of course, is the EUR. These abbreviations are used to describe currency rates. For example, the GBP USD 1.3159 means that for 1 pound, you can buy $1.3159 in the United States dollar. And unlike your favorite store, here prices are calculated precisely up to 4 digits to the right of the decimal, where that 3159 came from after the decimal point. This is extremely important. Even the slightest change of maybe 0.0001 can cause a huge loss in the foreign exchange market. So suppose your local United States dollar store rounds up the price from $1.3259 to $1.3260. This means that you're going to lose 0.0001 cent from every pound. Now, if you trade 1 billion pounds, you're going to lose $100,000 United States. That's huge, right? So you can see how much of even just a slight change at the 0.000 whatever factor can really affect you in trading. But why do currency rates change so often? Well, the amount of foreign currency in the world is limited unless the government decides to print more banknotes. For the sake of simplicity, let's say that it's just limited, okay? And when limits apply to the laws of supply and demand, it comes into play. So very briefly, when demand rises, the prices increase. So let's say you have 100 apples and you have 300 people wanting to buy apples. The demand is higher, right, than the supply because you have 300 to 100. So it's only logical for you to increase the price until you only have 100 people that still want to buy. You sell all the apples and have gained a profit. You can reinvest that profit, buy more apples, and then sell them for a higher price. And this is how the Forex market works. When sellers see the demand rising, they raise the price to sell their foreign currency and earn more profit. Now, please note, let's say only 50 people want to buy the apples. You're going to have to lower the price to sell all those apples, right? And it's the same in Forex. In this way, supply and demand ensures that the currency rates are always changing. What currencies are traded? We have majors, cross rates, and exotics. Majors are the most popular currencies that have the lion's share of the market. Majors include the euro to the US dollar, the British pound to the US dollar, the Australian dollar to the US dollar, the New Zealand dollar to the US dollar, and again, AUD is the Australian dollar and NZD is the New Zealand dollar. Euro versus United States dollar, British pound versus the United States dollar, Australian dollar versus the United States dollar, and the New Zealand dollar versus the United States dollar. Again, these are what are called majors. Now, what are cross rates? Well, if the US dollar is not involved in the trade, the currency rate is called the cross rate. For example, the euro versus the pound, or the pound to the Japanese yen. Cross rates are used to make calculations easier. Less work for you if you trade a currency other than the dollar with another currency, which is also not the US dollar. Cross rates ensure that accountants also have less work to do. What are exotics? Exotics are all other pairs. All that are not majors with the US dollar are what we call exotics. Now, not many people buy them due to the high risks and volatility, as well as their bad reputation. So why trade currency? Well, you're going to be trading with foreign companies and you're going to make money. So these are the two main reasons for trading currency. In the first case, we're talking about companies which sell their products abroad. So let's say Ford Motor Company sells 10,000 brand new Mustangs to China for 6 million Chinese yen. After the sale, Ford approaches the Forex to exchange the Chinese currency to US dollar because as an American company, they pay taxes and paychecks and CEOs' annual bonuses in US dollars. And the second case is as simple as that. You trade to earn money. But how do traders earn money? Well, buy for less, sell for more. Total rule here. All traders monitor the economic situation in the world and try to predict the changes in currency rates. For example, someone buys an enormous amount of currency. The currency goes up. Remember the demand model? Supply and demand. Other traders notice this and jump into action, buying before the currency rate inflates exponentially. The demand increases further, causing the price to continually increase. Demand increases, price increases again, and so on and so on and so on. The thing traders identify is the moment that the price is at maximum and begin selling it. Then the margin is yours. And when traders see that it's time to sell, they give the order to their broker. But why do you need a broker? Why can't you just do it yourself? Regular people like you and me are not allowed to directly trade in the Forex market. Traders use a broker company. A broker has all the permissions to provide services to clients and trade on the foreign exchange market. So the broker is your agent and you are the trader. The broker keeps the trader's money in their account. Now, remember this, the account is also well insured, so you don't lose money unnecessarily. More so, the broker will give you an application to allow you to trade on the foreign exchange market, and this is called a trading platform. Now, is this all for free? No, it's not, and this is why. So brokers give you access to the market. They provide all the necessary information and they give you analytics. Brokers provide a trading platform for you to be able to trade on the foreign exchange market, and brokers charge a commission for each deal you make. This is called a spread. So how do you start? Well, that's totally easy. You're going to get back with the person who shared this with you and get their Epic trading link. You're going to become a scholar today for $99.99. Now, after that, you're going to learn the process. Trading is risky, so you want to learn from those who know exactly what they're doing. Our trading trainers are 7- and 8-figure earners on the foreign exchange market, so why wouldn't you want to learn from them, right? And don't get overwhelmed. Your Forex education platform with Epic will not only guide you in understanding the market, but also help you grow your mindset as a professional trader. In closing, stay plugged in. We have daily trainings. We have daily trainings multiple times a day from beginner all the way up to expert. We also have signals, right? These are huge. And continue to learn, continue to refine and fine-tune yourself as a trading professional. Always start in the demo accounts until you're absolutely ready, and then start with a small amount of money. Share the knowledge with others, and above all, have fun. Now, this is the end of the webinar, but if you want, you can follow me on Instagram at The Travel Boss Mom. You can follow me on Facebook at facebook.com/The Travel Boss Mom. You can look me up on YouTube as the Forex Boss Mom, or you can visit my website and get more information about this amazing program with Epic at moneyonthebeach.com. Thank you guys so much. Have an amazing, amazing day. And if you have any questions, get in touch with me. My email address is amy@sandyflipflops.com, or you can even text me at 409-392-0022. Have an amazing day, and I look forward to seeing you succeeding in the market.